You earn more than you did before. Your income increased. Your responsibilities expanded, and the pressure did not leave. It followed you from the smaller apartment to the larger one. It accompanied your promotion. It arrived with the bonus check and settled into the new car payment. The financial tension that you expected to dissolve with more money has not dissolved. It has changed shape but not substance. The numbers grew, the pressure adapted, the promise did not materialize. This is not your failure. This is not your weakness. This is pattern recognition in real time. Income increases rarely solve financial stress. They redistribute it. They relocate it. They sometimes intensify it, but they do not eliminate it. The pressure that exists at $30,000 exists at $60,000. The anxiety that accompanies $40,000 accompanies $80,000. The sleepless nights that visit $50,000 visit $100,000. The amounts change. The underlying tension remains. You have witnessed this cycle personally or observed it in others. Raise arrives. Lifestyle expands. New obligations form. Expectations rise. Pressure returns. Another raise arrives. The cycle repeats. Each iteration feels like progress. Each iteration delivers the same underlying tension in new packaging. This pattern transcends individual behavior. It operates across demographics, education levels, industries, and decades. The executive earning $300,000 experiences financial stress. The tradesman earning $70,000 experiences financial stress. The difference is not in the presence or absence of stress. The difference is in the magnitude of the numbers involved. The stress scales with the income. The pressure grows proportional to the increase. The anxiety expands to fill the available financial space. You told yourself, once I reach that number, things will settle. You reached the number, things did not settle. Most people interpret this as personal inadequacy. They conclude they need better money management skills. They assume they need more discipline. They believe they need another raise, another promotion, another income stream to finally achieve financial peace. They chase the next level, thinking it will deliver what the current level has not delivered. This interpretation misidentifies the source. The problem is not the amount. The problem is not the individual. The problem is structural. Modern culture teaches that income is the solution. Increase is presented as freedom. Yet the data does not confirm the promise. Money does not remove stress. Money magnifies the structure it enters. If the system receiving the money is disordered, increase intensifies the disorder. If the framework is unstable, additional resources destabilize it further. If the foundation cannot support current weight, adding more weight does not strengthen the foundation. Income is neutral. It amplifies whatever system contains it. Pour water into a cracked vessel and the water leaks faster. Pour water into a solid vessel and the water remains. The water itself is not the issue. The container determines the outcome. Most financial systems are cracked vessels. They appear functional at lower volumes. They seem adequate for smaller amounts. But they fail under pressure. They cannot contain increase. They cannot manage expansion. They leak resources as quickly as resources enter. The evidence appears consistently across human experience. Lottery winners frequently report financial stress within years of winning. Professional athletes with multi-million-dollar contracts file for bankruptcy. Executives earning substantial salaries live paycheck to paycheck. Inheritance recipients dissipate generational wealth rapidly. The pattern repeats regardless of the source of the increase. Tech founders sell companies for millions and report anxiety within a year. Professionals double income and quietly double their obligations. Entrepreneurs scale revenue and discover that stress scales faster. This is not moral judgment. This is systemic observation. The structure determines sustainability. The framework determines stability. The container determines retention. Biblical accounts chronicle this pattern extensively. They document the relationship between increase and structure without moral commentary. They record cause and consequence. They preserve the observations for examination. Consider the account of Solomon recorded in the books of Kings and Chronicles. Solomon inherited a stable kingdom from his father David. He received divine wisdom for governance. He accumulated wealth that exceeded all contemporary monarchs. Gold flowed into Jerusalem. Silver became common. Trade routes delivered continuous tribute. The kingdom experienced unprecedented prosperity. The biblical chronicler records the accumulation methodically. Solomon's annual gold intake measured 666 talents. His merchant ships returned every 3 years loaded with gold, silver, ivory, apes, and peacocks. His throne was crafted from ivory and overlaid with pure gold. His drinking vessels were gold. His household vessels were gold. Silver was considered worthless in his time because gold was so abundant. The kingdom expanded. Construction projects multiplied. The temple required 7 years to complete. The royal palace required 13 years. Fortifications extended throughout the territory. Infrastructure projects employed forced labor. Administrative complexity increased proportionally. But the chronicler also records the systematic introduction of structural problems. Solomon multiplied wives for political alliances. He accumulated horses contrary to established guidelines. He increased taxation to fund expansion. He implemented forced labor policies. He created bureaucratic layers that complicated governance. The increase was real. The prosperity was documented. The wealth accumulation was unprecedented. But the structural foundation gradually eroded under the weight of the expansion. The biblical account does not moralize these decisions. It chronicles them. It records the accumulation and the structural changes without commentary. It documents the relationship between increase and system integrity. The consequence appears in the later narrative. The kingdom divided immediately after Solomon's death. The unified structure could not sustain the accumulated tension. The forced labor policies created resentment. The taxation burden generated rebellion. The political marriages introduced competing religious influences. The administrative complexity produced instability. The gold remained. The throne remained. The treasury remained. The kingdom fractured. The increase that was intended to strengthen the kingdom ultimately fragmented it. Not because increase itself was problematic, but because the structure receiving the increase was compromised. This pattern repeats throughout biblical accounts. Increase enters disordered systems and amplifies the disorder. Resources flow into compromised structures and accelerate their failure. Wealth accumulates in unstable frameworks and destabilizes them further. The inverse also appears in biblical records. Increase enters ordered systems and produces stability. Resources flow into sound structures and strengthen them. Wealth accumulates in stable frameworks and reinforces their integrity. The account of Joseph in Egypt demonstrates this inverse pattern. Egypt experienced 7 years of unprecedented abundance, followed by 7 years of severe famine. The abundance was temporary. The scarcity was predictable. The structure determined whether the abundance would sustain the people through the scarcity. Joseph implemented a containment system during the years of abundance. 20% of all production was collected and stored. Distribution was controlled. Reserve allocation was managed systematically. The structure channeled the abundance toward sustainability rather than consumption. When the famine arrived, Egypt not only survived, but became the regional resource center. Other nations traveled to Egypt to purchase grain. The abundance that was properly contained provided stability during scarcity. The structure that managed increase effectively sustained the population through decrease. The same abundance that strengthened Egypt would have destroyed it if mismanaged. The same increase that provided stability could have produced instability in a different structure. The resources were identical. The structural approach determined the outcome. This reveals why income increases do not solve financial stress. They interact with existing structures. They amplify current systems. They intensify present patterns. If the structure is sound, increase strengthens it. If the structure is compromised, increase exposes the compromise. Most people operate with compromised financial structures. They spend before they earn. They commit to obligations without margin. They expand lifestyle immediately upon income increase. They assume future income to support present consumption. They create financial pressure through structural decisions rather than income limitations. When increase arrives, it enters this compromised structure and amplifies the existing pressure. The larger income supports larger obligations. The higher salary funds higher expectations. The additional resources enable additional commitments. The financial stress grows proportionally because the underlying structure remains compromised. More income does not alter the outcome when the structure remains unchanged. Structural integrity alters the outcome when increase enters. Structural change follows different priorities than income expansion. Containment appears instead of expansion. Margin appears instead of maximum utilization. Sustainability replaces optimization. Most people pursue income increase because it appears more achievable than structural change. Earning more money seems simpler than spending less money. Getting promoted appears easier than managing expectations. Finding additional income streams feels more productive than examining consumption patterns. This preference creates the cycle. Income increases. Structure remains unchanged. Pressure relocates to the new income level. The person pursues another income increase. The pattern repeats indefinitely. The cycle only changes when the structure changes. The framework receiving the income becomes the determining variable. Money consistently magnifies existing systems rather than replacing them. This is why financial stress often increases immediately after promotion. The structure expands before the foundation stabilizes. Most people do not lack income. They lack containment. Structural integrity in financial systems involves several observable elements. Expenditures remain below income consistently. Obligations do not exceed capacity to fulfill them. Resources are allocated with margin for uncertainty. Consumption patterns remain stable despite income fluctuations. Lifestyle expansion occurs gradually and sustainably. These elements create a container capable of managing increase effectively. They establish a framework that channels resources towards stability rather than consumption. They provide structure that can sustain growth without creating pressure. When increase enters such a system, it strengthens rather than destabilizes. Additional income creates additional margin rather than additional obligations. Higher earnings support greater security rather than greater consumption. Wealth accumulation occurs because the structure contains rather than dissipates resources. The financial stress that accompanies most income increases disappears, not because the income is sufficient, but because the structure is sound. The pressure that follows most promotions absent, because the framework can accommodate expansion without compromising integrity. This structural approach explains why some people experience financial peace at modest incomes, while others experience financial stress at substantial incomes. The amount is not the determining factor. The structure is the determining factor. The container determines whether resources produce stability or instability. Biblical accounts document this pattern consistently. They record the relationship between structural integrity and resource management across generations. They chronicle the consequences of sound financial frameworks and compromised financial systems. They preserve these observations without moral judgment or emotional manipulation. The accounts simply record what happened when increase entered different structures. They document the outcomes. They allow the patterns to speak for themselves. This pattern operates independently of religious belief. It functions across cultures, time periods, and economic systems. It appears in ancient accounts and contemporary observations. It transcends individual circumstances while affecting individual outcomes. Understanding this pattern does not require religious commitment. It requires pattern recognition. It demands observing the relationship between structure and outcome. It involves acknowledging that money amplifies existing systems rather than replacing them. The implications are practical. Pursuing income increases without addressing structural integrity perpetuates financial stress. Expecting more money to solve financial problems ignores the systematic nature of the issue. Assuming that the next raise will provide financial peace overlooks the pattern that governs resource management. The alternative approach prioritizes structural development alongside income development. It examines the framework that receives resources before focusing solely on increasing resources. It addresses the container before increasing the contents. This approach does not guarantee outcomes. It does not promise financial success. It does not eliminate all financial challenges. It simply aligns efforts with observed patterns. It works with systematic realities rather than against them. The choice remains individual. Continue pursuing income increases while maintaining compromised structures, or address structural integrity while pursuing income increases. The first approach perpetuates the cycle. The second approach interrupts it. Neither approach is morally superior. Neither approach is universally applicable. Both approaches produce predictable consequences based on structural realities that operate regardless of individual preference. The biblical accounts document these consequences without emotional resolution. They record what happened when people made different structural choices. They preserve the observations for examination by subsequent generations. The patterns remain consistent. The patterns continue operating. The consequences still follow the same systematic relationships that governed ancient kingdoms and modern economies. Your financial stress may have structural roots that income increases cannot address. Your pressure may originate from framework problems that additional resources cannot solve. Your tension may reflect systematic issues that require systematic solutions. This observation does not diminish your efforts to increase income. It suggests examining the structure that receives the income alongside the efforts to increase it. The container consistently determines what the contents produce. The pattern will continue operating regardless of recognition. The structure will continue determining outcomes, whether acknowledged or ignored. The systematic relationships that governed biblical accounts continue governing contemporary financial experiences. Recognition changes nothing about the pattern itself. It only changes whether it is observed. Structural change appears only when the structure is addressed. Awareness enables systematic solutions rather than symptomatic treatments. The chronicled accounts remain available for examination. The documented patterns continue operating. The recorded consequences still follow from the same structural relationships that produced them originally. The choice is recognition and response, or continuation of the existing cycle. Both choices produce predictable outcomes based on observable patterns. Both paths lead to documented consequences. The Biblical chroniclers preserved these observations without emotional resolution because the patterns operate independently of emotional response. They documented systematic relationships because systems function regardless of individual feelings about them. The accounts remain, the patterns continue, the consequences follow. The structure determines the outcome. Increase does not create peace. Structure determines whether peace is possible. In the next account, this same pattern appears under different conditions, where increase no longer intensifies pressure but begins to produce stability. The accounts build upon one another. If you wish to follow the pattern as it unfolds, you may subscribe.